Hello, and welcome to your real estate market update. If you're watching the news or listening to friends talk about the real estate market, you might be hearing all sorts of opinions about where prices are headed. But here's the thing, opinions don't pay your mortgage, data does. And the September numbers just dropped, and they're telling us something really interesting. While headlines scream about year-over-year declines, the month-over-month data is painting a completely different picture, one that smart investors are already acting on. So the question is, are you paying attention to what actually matters? Before we dive deep into the numbers, let me ask you something. If you were in the market to buy or sell a home today, would you want to know what happened last year at this time? Or would you rather know what happened last month? Of course, you'd want the most current data, right? That's exactly why we focus on month-over-month analysis in these reports. The market moves fast, interest rates change, buyer behavior shifts, and waiting a full year to understand trends means you're already behind. Month-over-month data gives you the pulse of what's happening right now, not what happened when interest rates and market conditions were completely different. Now, I know we're about to go through a lot of numbers, and I mean a lot of numbers, but here's why that matters. Numbers don't have opinions. Numbers don't speculate. Numbers tell you exactly what's happening in the market. When you arm yourself with real data, you stop making emotional decisions and start making informed investment decisions. You need this information to be a better real estate investor, whether you're buying your first home or adding to your portfolio. Let's talk about what the Toronto Real Estate Board reported for September 2025. September home sales increased in the Greater Toronto Area compared to a year earlier, as more homebuyers sought to take advantage of more affordable monthly mortgage payments. Buyers continued to respond to substantial choice in the marketplace by negotiating the average selling price downward. The Toronto Real Estate Board president noted that the Bank of Canada's September interest rate cut was welcome news for home buyers. With lower borrowing costs, more households are now able to afford monthly mortgage payments on a home that meets their needs. Increased home purchases will also stimulate the economy through housing-related spin-off spending, helping to offset the impact of ongoing trade challenges. Greater Toronto Area realtors reported 5,592 home sales through the Toronto Real Estate Board's MLS system in September 2025, up by 8.5% compared to September 2024. New listings entered into the MLS system amounted to 19,260, up by 4% year over year. On a seasonally adjusted basis, September home sales were up month over month compared to August 2025. In contrast, new listings were down compared to August, suggesting that market conditions may have tightened slightly in some segments. The MLS Home Price Index composite benchmark was down by 5.5% year over year in September 2025. The average selling price at $1,059,377 was also down by 4.7% compared to September 2024. However, on a month-over-month seasonally adjusted basis, the MLS Home Price Index composite dipped by only 0.5% compared to August. The average selling price remained largely flat compared to August, edging up by 0.2%. The Toronto Real Estate Board's Chief Information Officer noted that while home sales have improved over the past year, they still remain below normal levels relative to the number of households in the Greater Toronto Area. Two more 25 basis point interest rate cuts by the Bank of Canada would see monthly mortgage payments move more in line with home buyers' average incomes, further spurring home sales and related economic activity. So here's what this really means. Yes, prices are down compared to last year, but month over month, we're seeing stabilization and even slight increases. This is the opportunity window. When you combine lower interest rates with price stabilization, you're looking at improved affordability and the potential for capital appreciation as the market continues to recover. The Greater Toronto Area market showed clear signs of a brisk autumn market in September. The overall median sold price for all property types saw a solid increase, climbing from $899,000 in August to $920,000 in September. That's a month-over-month increase of 2.3%. Let that sink in for a moment. While year-over-year numbers show decline, month-over-month we're seeing growth. This is exactly why current data matters more than historical comparisons. The market dynamics also remained active, with 5,323 properties sold and 19,173 new listings coming to market. Active listings stood at 28,885 properties across the Greater Toronto Area. A key indicator of the market's temperature is how long homes are sitting. For all property types, the days on market was 35 days, but when you account for properties that were delisted and relisted, the true property days on market was a more substantial 68 days. This tells us that while well-priced homes are moving in about a month, others are taking longer, requiring price adjustments before they sell. This is valuable information whether you're a buyer or a seller. If you're selling, pricing strategy matters now more than ever. If you're buying, this gives you negotiating power on properties that have been sitting. Now let's transition and examine these numbers in more detail. We're going to look at what happened across the entire Greater Toronto Area, breaking it down by property type because not all real estate is created equal. Each dwelling type has its own story to tell. Now, an important note before we dive in, we're going to focus on the dwelling types that have the most impact on overall pricing based on their dominance in the market. We're going to look at the categories where significant transaction volume occurs, because that's where the real market story lives. When you only have a handful of sales in a particular category, those numbers can be easily skewed by just one or two transactions. That's not meaningful data, that's statistical noise. So we focus on the dwelling types with enough volume to give us reliable, actionable insights that actually reflect true market behavior. In September, detached homes bounced back. The median price rose to $1,200,000, a month-over-month increase of 1.7% from August. This is significant because it represents a complete reversal of the decline we saw from July to August. The market found its floor at $1,180,000, and buyers decided that represented value. There were 8,623 new listings in September, a substantial increase in inventory compared to August's 5,824. Despite this inventory surge, prices still climbed, which tells you demand is strong enough to absorb additional supply. The days on market held steady at 32, very similar to August 29, and property days on market came in at 65. Moving to semi-detached homes, this segment saw one of the strongest price appreciations month over month. The median price jumped from $925,000 in August to $946,301 in September, an increase of 2.3%. There were 1,371 new listings hitting the market. This strength is further confirmed by a very short days on market of just 28 days, the fastest of all the categories we're reviewing today. Property days on market was 54 days. Semi-detached homes are clearly in demand, and buyers are acting quickly when they find the right property. This is the hottest segment in the market right now. Now let's talk about freehold townhouses. The townhouse market held steady in price, with the median ticking down slightly from $892,000 to $890,000, a negligible decrease of 0.2%, essentially flat month over month. There were 1,615 new listings, but the story here is speed, with a days on market of just 30 and a property days on market of 61. Well-priced freehold towns are moving quickly, showing strong demand for this middle ground housing type. This segment offers that sweet spot for many buyers: more space than a condo, more affordable than detached. Finally, let's look at condo apartments. The condo market was particularly dynamic. The median price rose from $566,000 in August to $575,000 in September, a healthy 1.6% monthly gain. This segment also had the highest volume of new listings at 5,287, the most active segment in the entire market. However, it's important to note that condos are taking significantly longer to sell than other property types, with a property days on market of 82 days and days on market of 41. This indicates a more balanced market with more options for buyers. If you're a condo buyer, you have negotiating power and choice. If you're a condo seller, strategic pricing and presentation are absolutely critical. So to summarize the Greater Toronto Area trend, we saw positive price momentum from August to September across the dominant market segments. Detached homes, which represent a significant portion of the GTA market, rebounded with a 1.7% increase to $1,200,000, completely reversing the prior month's decline and showing that buyers view current pricing as attractive. Semi-detached homes led all categories with 2.3% growth and are the fastest selling property type at just 28 days on market. Freehold townhouses held essentially flat with a negligible decline of 0.2%, but are moving at impressive speed with 30 days on market. Condo apartments rose 1.6% and had the highest volume of new listings at 5,287, but take the longest to sell at 82 property days on market. This month, the overall Greater Toronto Area median price is $920,000. Last month, it was $899,000. That's real appreciation of 2.3% happening right now in the current market, driven by strength across multiple property types. Here's what I want you to take away from all of this. The narrative that the market is falling isn't telling the whole story. Month over month, we're seeing price increases across the board. We're seeing lower interest rates making mortgages more affordable. We're seeing inventory levels that give buyers choice, but also show that well-priced properties are moving. This is what opportunity looks like in real estate. It doesn't come with fireworks and a sign that says buy now. It comes in the form of data that shows stabilization, affordability improvements, and positive momentum. If you're thinking about buying, the combination of lower rates and current pricing creates a window that may not last. If you're thinking about selling, understanding how quickly homes in your category are moving and at what price points is critical to your strategy. And if you're investing, these numbers should be music to your ears because they show a market finding its footing with room for growth. I want to pause here for a moment because if you're finding value in this content, don't forget to like this video, subscribe to the channel, and hit that notification bell so you never miss an update. And if you know someone on their own real estate journey who could benefit from this information, be sure to share this video with them. Your support helps me continue creating valuable content for you. And honestly, the more people who understand how to read market data instead of just listening to headlines, the better decisions we'll all make together. Now, here's what I want you to do next. If any of this resonates with you, if you're thinking about buying, selling, or investing, or if you just want to understand how these numbers apply to your specific situation, I want you to book a call with me through my Calendly link. You'll find it in the description below. We can talk about all things real estate, and I can go over an in-depth analysis of a potential home purchase or even a home evaluation for a property you currently own. I'm also a licensed mortgage broker, which means I can assist you in getting a new mortgage or restructuring your existing one to take advantage of these lower rates we're seeing. This isn't just about looking at listings. It's about creating a comprehensive strategy that aligns with your financial goals. The opportunity in real estate isn't found in the headlines. It's found in the data. It's found in understanding market cycles. It's found in acting when others are hesitant. You now have the numbers. You understand what's actually happening month over month versus what happened a year ago. The question is, what are you going to do with this information? Stay savvy, stay informed, stay knowledgeable. And until next time, may your investments flourish and your dreams of homeownership become a reality. Catch you in the next one.